Broadcom is a pretty well diversified company from a semiconductor point of view. The focus has been on AI, all things AI, as you know, for the last 18 months, 2 years almost now. And so that overshadows in investors' mind everything else. If you look at some of the large semiconductor companies like TI and ADI, some of the diversified analog ones, they've had a really rough go of it in the last 18 months or so. But they've turned now too, because their core business, all the non-AI semiconductors, is starting to pick up. So what's interesting about Broadcom is some of the lusters come off of the AI play, as you've seen with NVIDIA, but their AI business is quite a bit different than NVIDIA's, and it's just starting to grow. So you can have a pretty good growth year in 25, and then you can add to that the rebound in the core semiconductors, and you could see very easily that the semiconductor business in 2025 is probably going to well outperform peer groups and the industry as a whole, because they've got both pieces, AI and core semi.
Got it. And I just want to get your sense in terms of, when you're saying that Broadcom is a diversified business, it has several revenue streams. What does that mean for shareholder returns going forward? Because it seems to be a bit of a herd mentality. Now, I'll give you a case in point. Yeah. When NVIDIA fell the other day, right, it dragged with it all the other AI-related stocks or stocks that had anything to do with AI chip manufacturing. And so Broadcom also got dragged down. And so I want to get your sense on whether or not that should be the way investors should be looking at this name, in clubbing it, because when one goes down, it drags everything else.
There's always been these periods. I joined the stock market before the stock market bubble in '97. And during that period, the internet stocks overshadowed everything. And so the market trades on the very big driving names. That happens all the time. It gets to a peak, it sells off, it affects everybody. And then when the dust settles, people go back to other themes or the core value of a company. That's one of the beauties of diversified analog semiconductor companies like TI. They're steady growers year after year. They get jerked around by the market. But if you look at their chart over time, it's been up and to the right. Broadcom has the benefit of that because they've got a diversified semiconductor company. The AI trade has overshadowed that for them and everybody else. When NVIDIA traded off, anybody associated with AI traded off too. When those investors leave that space or calm down about it, then the intrinsic value of the company starts to shine through. And there's where you're going to see a difference. NVIDIA has been a great company. They're doing very well. They got overhyped and the stock ran. The intrinsic value of the company is heavily tied to AI, where the intrinsic value of someone like Broadcom isn't as nearly as tied to AI. They're doing really well in AI, but they've got all these other, their software business, which we haven't even talked about, is doing phenomenally well. They just closed the VMware acquisition, and it's outperforming expectations. The wireless business, 90% of the wireless is Apple's iPhone, and you just had Qualcomm on. Qualcomm is diversifying into AI PCs because in 2 years they won't exist anymore, and Apple as the modem provider, 2 to 3 years max. Apple's doing their own modem, and when they go to their own modem, they're using more content from Broadcom. So 2025 could be a good year for them, a big year for them in content in the fall iPhone 17. So this is it. There's a lot of other pieces to the puzzle besides AI that are benefiting Broadcom. A lot of investors don't see that because they've been blinded by AI, but it's coming through. This quarter is kind of a bottom. It's coming through next quarter and through 2025, and I think you're going to see a different play a year from now.